What's up, world? Sophisticated investing life here, and today we're going to talk about how to analyze any stock, no matter the situation, for a potential investment. Now, to dig in, just going straight into things, you must understand the difference of these three elements. The business, you got to understand the business, got to understand the stock, and you need to understand the connection between the two. Now, first, let's try to understand the business. Now, when you're trying to understand the business, you need to think like a business owner. I don't know how many of y'all have ever owned a business before, but it's a little bit different. First off, it's what is the product you're looking to sell? What is that key product, key function, and how are you going to generate revenue? It's a very key component. How are you actually going to generate revenue? What is the sales process for generating that revenue? How are you going to get customers to know you're around? Are you going to go a McDonald's route and try to do advertising and place locations against the freeway, or do you go a more traditional route with a sales representative that's trying to work with maybe an enterprise like a large business over a number of months in order to get that sale? So what makes the company different than competitors? That's another thing. What's your value proposition? What makes you different than any other company out there? Like, these are things you need to think about for a business that you're thinking about investing in. And also, one of the biggest things to keep in mind is, what are the key performance indicators? What are the numbers that show before they hit the financial statements, right? Before you get the revenue, for example, with Netflix, you need to look at subscriber count, because the subscriber count is going to tell you potentially what revenue is going to be in the future. And this is actually one of the secrets to a lot of hedge fund managers. These hedge fund managers start looking at key performance indicators before they look at the financial statements, and it gives them kind of a clever way to do really well picking stocks. Well, and speaking of secrets, have you all ever wondered how Warren Buffett just became so much more wealthier than any other investor in the market? Like, not even close. It makes no sense. And not only that, ever wondered how you can take what he's done, his secrets, and turn that to a 6 or 7 figure account for yourself, even if you're starting from scratch? Well, if you're actually interested in that, make sure to click the link below and download my free PDF guide that talks about Warren Buffett's top 3 secrets on how he invests and how you can use them to take your investments to the next level. Now that we got the business out the way, we're starting to think in a more of a business mindset. Now let's turn to the stock. Now, when you're thinking about the stock, first and foremost is the valuation. The valuation is what matters the most. Price to earnings, price to sales, those are the main two that I look at. If you're interested in enterprise value, enterprise to EBIT is really good as well. But the goal is to understand why the valuation multiple is what it is today. Now, to understand that, you need to keep in mind that a valuation multiple is a function of growth and risk. It's a function of growth and risk. I think that's forgotten a lot when people look at valuation multiples. Now, the growth part is easy. It's easy to see, makes perfect sense. The risk part, it's a little bit tougher. A little bit more murky, a little bit more nuanced. That's what usually trips people up. There are a number of risks out there, but the two easiest risks to see is the financial risk, distress risk, and profitability, business risk. So on the distress side, simple. They have way more debt than their peers. Plain and simple. If they have way more debt than their peers and it's hard to understand how it fits, why would they have that debt, definitely a stock to stay away from. Second side is profitability. If you choose a stock or a company like within the peer group where they have the highest margins, you're probably picking the right company. Just solely on that, in terms of the least amount of risk involved in the company. So that is important. Other places to look at, one thing that's often overlooked is the investor base of a stock. You need to pay attention to the investor base. It matters because different investors influence stock prices in different ways. How much of it is owned by institutional investors? Institutional investors move in a different way than retail. When you got a lot of retail investors, expect a lot of volatility. The stock just going to keep moving up and down. So it's a little bit scarier. However, if you flip on the other side, it has a lot of institutional investors. I mean, sometimes that's good, sometimes not always the best. Because although they are in, which means less volatility, they might not be the best at buying. they might not always help push the stock up. So it's a trade-off. Now, if you have the company owner in there, he's never going to sell. He's always going to buy. That's something. Mutual funds, they're usually long-term holders. They're pretty good about that. Hedge funds is a crapshoot. I know a lot of hedge fund managers that hold stocks much longer than mutual fund managers. And I also know a number of hedge fund managers that will flip a stock in a day. So it's a little bit tricky, but for the most part, when you have institutional investors involved, it's usually a safer stock. Now, understanding the connection between the two. You understand the business. You're starting to learn more about the business side, how the company generates revenue and the sorts. Now you learn about some of the intricacies of a stock, which makes this different than like just investing in a business outright. And now the connection between the two. And that is company management and the capital allocation decisions they make. Now, company management, essentially all of their decisions, all their major decisions is the fate of the company, the fate of the direction of that company. And there are key decisions that company management can really make. And really, it comes down to two things. They can either reinvest in the business or they can reward stakeholders. When I say stakeholders, I'm thinking of both shareholders and debt holders. All right. And when it's shareholders, you got two routes. You can either pay dividends, which it takes a certain company and a certain amount of stability to consistently pay dividends. And if you cut your dividend, the market will punish you. Hands down, not even close. So watch out for those companies. And there's also those who opportunistically reward shareholders through share buybacks. So these are different things you need to think about. And also, should they even be paying a dividend? Should they be rewarding shareholders? What are the other options to reinvest in the business? When a business is growing at a relatively fast clip, do they really need to pay dividends? Should they even think about buybacks? Like, if y'all have ideas to reinvest the money, reinvest the cash. Best way to figure out if a company has a lot of ideas to reinvestment plans, make sure and check the press releases of a company. Just scroll through maybe the past year or two. You will see if they actually have anything to work with. And there you have it. It's a quick video on how to analyze any stock, any situation. This is the framework you should use to touch on anything. Understanding the company, understanding the stock, and understanding the decisions made by company management that connects the two. I will have more videos getting more into the intricacies of different types of stocks, whether that be growth stocks, tech stocks, dividend stocks, even weed stocks. Watching out for you cannabis fans. I'm always watching out for y'all. So make sure to stay tuned. Also, don't forget to download my free ebook, Warren Buffett's Top 3 Investment Secrets of What's Made Him the Wealthiest Investor Alive. And that's all I have for you all today. Thanks for watching and stay sophisticated.